Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. Today is November 27th, 2019, Wednesday. As I record this video, market should be closing in about 40 minutes. So you should be seeing a little bit of flashing lights on your left. Thank you for your patience. I was out of town last weekend, so I am back getting ready for the Thanksgiving weekend, long holiday week. Market is closed tomorrow, obviously, and half day, right? Half day on Friday. But nonetheless, I'm going to be thoroughly enjoying this long holiday weekend. I've been traveling quite a bit. And I don't really do well when I'm traveling. What I mean by this, like if it's not my own bed, I just don't sleep very well. So I got a little bit of a, sore throat. So I might be coughing on the video. Please excuse me. Let's continue with our weekly analysis here. Let's start with Spider, Qs, Diamond, Russell, Semi, the banks, and the Semi. I do have 2019 Thanksgiving special promo, which I'm going to talk about towards the end of this video. Something I do usually on a yearly basis on every Thanksgiving. So that promo is going to run until Sunday. Which is the December 1st, late evening. So you have plenty of time to think about that, and I'll go through them after the analysis here. So let's just kind of recap, and first let's talk about more of an intermediate term perspective, just kind of what you're seeing here in your chart here. This is intermediate term perspective, the way I see it. Everybody has different way of looking at the market, and as you guys know that I'm pretty much probably much longer term than most people you follow on Twitter and YouTube. So this is intermediate term for me. So what is primary term? Well, that's a primary term. When you see a move like that, right? That's what you call a primary term uptrend, right? In a primary term uptrend, you do get these intermediate term corrections in between, and as the market continues higher, and they're, secular trend, which is much bigger. You're going all the way back to 1900s, but looking at things here, let's go back. So looking at things intermediate term, let's recap what we've been talking about here. And, many of you guys follow my video on a weekly basis. So you guys know, let's refresh our memory. First, I think, a lot of people are talking about this as potentially a triple top. But we've been talking about that. That's not how triple top works. We're probably going to stall there, but we're probably not going to see this thing coming all the way down to retest that 230 area, even though, your CNBC chart master told you that it was going to happen. And so these pullbacks definitely gave us the opportunity to accumulate more. And we know that stocks aren't going to go straight up. So we also been talking about these moves are not crazy at all, right? Market gets this kind of move here, pretty much V-shaped higher, goes right back to the all-time high in just about a quarter, in about 3 months or so, right? Yes, market needs digest. And what do you think it's going to do? I mean, we see a big move like that. You think that it's just going to continue higher? So these pullbacks, 7 to 5 to 6% corrections, is not crazy market. It's funny because every time we see 5, 6, 7% correction, people are like, okay, this market is so crazy. I mean, seriously, market is going to have this volatility. And so, especially when you see a huge move like that after this kind of 20% decline, we also talked about, when you see a 20% decline from its peak, we've never seen a V-shaped reversal ever. Never in history. I want you to go back and check. And if you can find any, please let me know. Because when you see a 20% corrections, again, this is just recapping everything. We've talked about this before in my market update videos. And, there's all my videos are there, all labeled there with dates. So you can always go back and check what I was talking about here, right? And and you guys know that I've been talking about how these levels are opportunity to buy. But anyway, so 20% decline. We never seen a V-shaped higher ever, right? So usually when you see a 20%, you're gonna see either a double bottom or triple bottom, or you see inverted head and shoulders, make lower low, right? Something like that. Or this thing just consolidates like crazy for months, right? It's a lot of shenanigans before going higher. Or you just get into a bear market. So this is the reason why, you know, nowadays there's so many people with stats, right? Stats. When this happened, market did this. When this happened, market did that. You know, so thing about that is market is just so savvy in creating new things. We can't always rely on that because nobody expected this thing to just go V-shape higher because it has never happened. So if you're just relying on stats, like past, you know, price action stats, you are not able to capture that, right? So we talked about that. And then we also talked about potentially, you know, a lot of people are looking at this as potentially a triple top or head and shoulder formation. So now people are talking about, okay, we already got triple top, but we have triple top. That's what people are saying. I'm not saying that I was saying that. I wasn't saying that. We already have a triple top. And then within that triple top, we got another triple top. That is a double trouble, man. This thing is going to tank. That's what a lot of people are thinking. So people are shorting it. Well, that's not how it happened. Remember, we talked about, again, I talked about this. This is how the market is going to do, you know, scare people out. Like, look at that head and shoulder formation, man, right? And we also talked about, you know, market briefly breaking below that. If I just draw a trend line or something like that, you can see we briefly broke below that, gone right back up, and looked like potential head and shoulder formation. Never materialized it. We didn't even really break the neckline. We just kind of stuck there, or held there rather. And subtly though, we were cultivating what? Higher lows. We talked about this, right? You guys remember all this? And so then we finally broke out, and then we broke out of this level. So this is exactly what we've been talking about. We're gonna see market stalling at the vicinity, but I don't believe the market is gonna tank. I don't believe the market is gonna crash or gonna go to 230s on Spider, right? We're gonna have these ups and downs. We're gonna see a pullbacks in that vicinity of 290-300, which we did. And these levels provided you a great buying opportunity. If you missed out this move, right? If you missed out this entirety move, instead of chasing it up here, why not wait for a pullback and buy this dip, buy that dip, buy that dip, right? But, you know, people always say stuff like, well, yeah, man, this market is so easy. Just buy the dip, you'll be rich. You know, people who say that, those people say that are the same people who never bought this dip because they're scared. Buying the dip is not easy. That's what people don't understand. You know, just keep buying the dip, man. It's that easy. No, it's not. What did you feel like buying right here? Did you buy this dip in late December? I mean, you guys know that I did pretty heavily. But do you think that was easy? Do you think that was easy? No, it wasn't. Do you think buying this dip was easy? No. Market, trading in the market, investing in the market is never easy because every time when there's a volatility, you know what I mean? You're always second guessing yourself. Like, is this market actually going to crash? It's scary because it involves your hard-earned money, right? Buying here was it was challenging for me, buying it down here. But I came to a conclusion that we're going to see a V-shaped reversal, which I called that back in early January and late December. And then, and once the market got up here, and I had a very good conviction that any kind of pullback is going to be a buying opportunity, which all these levels I was accumulating. And so now, excuse me, drinking my honey water for my throat. But anyway, so we talked about this level. So after stalling there for pretty much, you know, all summer, and that's a good consolidation. That's a good consolidation. After this kind of move, market I mean, this is a good sign. I don't know why people are looking at this as a bad sign. Market just went up about 20-25%, and market is refusing to give most of its gain, holding it up here, right? Digesting its gain, consolidating, and then boom, we finally broke out, right? That's how market moves, right? That's in the intermediate term. We go up, consolidate, and we go higher again. What does it look like? That looks similar to when we analyze the primary term uptrend, right? We go up, consolidate. We go up, consolidate. We go up, consolidate, and we go up again. None of these levels, we were never in a bear market. The reason why people say that we were in a bear market in 2012, 2015 and 16, and 2017 is because they're looking at things in short term. We were never in a bear market looking at a spot. I know sometimes they say, well, underneath the hood, certain sectors were in a bear market, certain stocks tanked. Of course. I'm sure certain sectors always tank no matter where we're at. I mean, think about where Spider is at today. Think about where Energy is today. XLE, right? It's just not doing anything. Of course, there's always certain stock or certain sector always in a bear market, you know? So that doesn't make sense. But looking at the overall broad market, when you look at S&P 500, that's how market moves. We're never in a bear market. People don't even understand what bear market is, you know? So primary term perspective, that's how the market moves. Go up, digest its gain, consolidate, stay sideways for a little bit, go back up higher, right? Same thing as if you're running, you can't run forever. Can you run forever? No. You need to rest. You work all day, you need to rest, and then you work again, right? So with that logic, you can see in the intermediate term, we go up, we consolidate, and we go up again. So again, we've talked all of this, just recapping everything now. And then I also talked about this level, right? Recently, I wrote an article about it. The market is breaking out. It's bullish. And also last week, what did we talk about last week? Or not last week, but last video, right? What did I say last video? Well, now they were breaking out, right? What did I say last week? Last video. Now that we're breaking out of this, all those people are scared to buy this dip. Now they're like telling themselves, well, now that our market is now getting back up, now it's getting ready to, now resuming with this primary term uptrend. Now I want to buy that dip. Now I'm ready, okay? I'm now ready to buy that dip. Now you're too late. You're too late. You see that how market is not giving you good dip? Now everybody's expecting 7, 8, 5% correction. Market is not giving you that. See that? Market is getting 320 was my target pretty much this year, and this level was here all year long. 320 is my target this year. Looks like we might even get that. By end of this year, we might even get to 330 by end of this year. And then 340 sometime early next year. But you see? Now everybody's saying, now I want that pullback. Now I want to buy that dip hard. Next time we see 7-8% correction, man, I'm going to buy that dip hard. Right? But market is not going to give you that. Now because now everybody's expecting this. Even maybe bears look to buy the dip. Well, you lost your chance. There are many chances in the summer, man. All right? So now market is going higher and higher, and we see very, very small pullback. We talked about this last week, didn't we? We talked about that. I showed you this, and I talked about how, yes, we're getting into overbought, but remember, last time we saw that, we saw a little bit of consolidation and market continued higher. This was only time when we saw that overbought level. This was in September that we did pull back. But you can see how this thing continues to move higher and higher. And then it almost looks like this is starting to look more like something like here, where it just kind of goes up and down a little bit, and this thing continues to move higher. Because we came to overbought, this is daily, we came to overbought sentiment, right? Quote unquote overbought sentiment on this oscillator. That's why you can't completely rely on oscillator all the time. Then you can see right here, You thought, okay, that's the level. That thing is gonna tank, right? This was at 260. It went all the way. It went to 300, 295, and you would have missed out this entirety of move. You only capture maybe here to here, and you miss this entire move. This is why you cannot just rely on, these short-term indicators. And so you can see we were already at overbought at here resistance. So everybody's looking at this. Oh my God! Last time we got there, man, that thing tanked, and you're missing out this move, right? So the question is, can the market keep going higher? Yes. Market can keep going high. We'll have these pullback. You know what I will do? And I tweet this out, or I've been written an article on it. Do a 10 EMA. Do a 10 EMA on the daily, and you can see how 10 EMA has been acting as support throughout, and that's kind of how it was in this move. Once 10 EMA kept going higher, and then we came down, hit that 50, hit that 20, just got continue higher. So what I'll do is I'll look 10, 20, 50 as a kind of a short term, minor term to gauge the trend. But you see that 10 EMA, we stalled there a little bit. We're just continuing to move higher. And again, we broke above this resistance now, right? How many charts you saw in bears talking about how this thing is going to go back down here, drawing a trend channel like that, right? You've seen this chart, somebody sharing it, right? On Twitter or StockTwitch or whatever, right? You've seen people share something like that is going to go back down to 293. Because most people don't understand how the market moves in a broad sense. So you got to understand the sentiment, the condition that we're in. We're no longer in this environment, the volatile environment. Market is adamant to pullback. When we do see a pullback, it's a very, very shallow pullback, and market continues to move higher. But you see, that's how the bull market works. Bull market doesn't, if you go back and if you study it, you're not gonna see a big move where like market all of a sudden comes here and just do something like that. That's how bears like to move things. I can see how when bears bring it down, they bring it down. This is why how retail traders are always scared, because when the bull run happens, it's always very incremental, like 0.4%, 0.3%, 0.5%, just very, very slow move, right? But when the bears come, they move it quickly, like 2%, 3% down day, right? So the most retail traders, what they do is they try to make money quick, right? They know that get rich quick is scheme. But yet when they come to the market, they're like, first they're scared. They don't want to go long here because, well, one of these days, man, you're going to wake up in the morning and you're going to be faced with something like that. You know what I mean? So first, they're scared to go long. I shouldn't go long here. This is not a level to start initiating anything long term now. Again, this is the opportunity right here. These levels, not here. Right? And second, you think a lot of these retail traders, what they think is, well, why wait weeks and months when you can make that in a day or two? That's their logic. And this is how they missed out this entirety of this move, this entire bull market. And then they're still waiting for some kind of recession or a crash, instead of looking at these dips as an opportunity, right? Buying the dip is not easy. I'm telling you. Do you think buying this dip was hard? Because, I'm going to show you my performance as of today. But I was holding all of my longs. So you guys know that I've been long since 2016 lows. I became an investor, long-term investor, 2016 lows, accumulating stocks and things like that heavily. And so I was holding everything. Not only that, I was buying these dips. So when I went through this, I already saw my account down, right? And on top of that, buying more was not easy. Because what if recession came, right? What if recession actually did come? So not only I'm going to lose with whatever I'm losing right now, I'm going to lose even more buying more, right? That's why in my long-term analysis that I've done for my members, we came to a conclusion that not only market is going to see a V-shaped reversal, that's what I came to, my analysis, we came to a conclusion we're not only going to see a V-shaped reversal, V-shape, but this market is going to thrive. And this is going to be kind of like that scare tactic, get people out if the market moves. And any kind of pullback was an opportunity to buy, right? So now we're breaking out of this. S&P is up 25% year to date. 320 is my target at the end of this year. Looks like we're going to hit it pretty quickly. The way I trade, am I going to buy any kind of short-term dips? No. I've been closing out some positions. Today, I close out some position. Today, I close out some position. And you guys know, if you follow me, you guys know, what's that? You know, let me see here. You guys, if you guys follow my blog, you guys know that, oops. So let's see here. So you guys know that I've been long on TQQQ with calls. I also have TQQQ shares that I bought these lows. I'm holding all of those shares. So only thing I've closed at 1/3 is on my calls. So I closed 1/3 of it. 1/3 of it. And all the entries are timestamped on my Twitter, so you can check that out. So yeah, so this is just, you know, just one of the positions. I have many positions, but one of the positions that I decided to share through a journal post. And so you guys know when I got in and I updated and things. But so I've been closing out. This is not a level to, for me, not a level to engage anything right now. But definitely I've been closing out some positions. You know, not a lot. I'm holding all of my long-term investing positions that are not aggressive, meaning like, you know, holding shares, because I hold many shares that I've been accumulating since 2016 lows. And I only decided to get, you know, accumulate triple shares down here. So I have triple shares that I've been accumulating since December lows. Everything like SPY, you know, SPXL, UDAO, TQQQ, TINA, FOS, semis also, SOXL, all of those. And also been buying calls on all the indices and some sectors there. So I think it can continue to grind higher, and I think any kind of pullback. We also have a gap here. Look at this gap. We got this gap. We got another gap here. So all those gaps going to provide support unless it gaps down again, making a little bit of island top. But at this point, market is going to be very adamant, you know, to see any kind of significant pullback. We're at 315 already today. I mean, just think about how the sentiment was at 284. How did you feel? How's everybody was talking about? Now at 315, right? So everybody's silent. It's just like everybody's dumbfounded. You know, they didn't think they were going to get to 315 just earlier this year in January, right? That's how fast sentiment can change. All right, so yeah, I believe they can continue higher. And let me just look at my weekly. We're getting there. On the weekly, we're getting overbought. But again, it can stay overbought and keep grinding. And that's how bull market works. It can stay overbought and keep grinding higher. So I want to continue to give benefit of the doubt to the buyers. Qs. Yeah, it's fully breaking out now. It's fully breaking out now. Haven't we seen this already? I mean, haven't we already seen something similar in 2016? That looks very, very similar to something like that. Looks like a breakout to me. Looks like a breakout to me. And they'll be like, K, that's going to be mother of all trap, K. Okay. And how long you been saying that? Right? That's just a guess. Like some people just like to guess. And after this kind of decline, that's a pretty healthy correction. You know, people knows that their market needs a healthy correction, quote unquote healthy correction. But when the correction actually happens, they're scared. They're scared. They're running around scared and panic. Like saying people, yeah, market needs a healthy correction, but market never gives you that ideal correction that everybody's looking for, right? that everybody can tolerate. What the market does is it's going to shock you first. So last December decline, what it shocked the world. But that was a healthy correction. Diamond broke out as well. Full breakout. Looks like very nice inverted head and shoulder, does it not? Left shoulder, head, right shoulder, neckline. I think sooner or later we may retest the neckline or in that vicinity. If it does, man, that's a great level to buy that dip. But remember, market will never give you the ideal level to buy the dip. Market is gonna either, bounce early or late. Never, or sometimes it does. Sometimes just a perfect level that everybody's looking at, that ideal level. It comes there, just perfectly bounces. Sometimes. But most likely what it's going to do, either bounces early, just so that people are waiting for that ideal level, they're going to miss it. Or it's going to bounce late because, people want to buy it at that level, and then when it comes down even deeper, they're going to say, so let's say if this thing comes down like this, to like 265, let's just say, and then people want to draw something like this, and say, aha, mother of all trap, and this thing is gonna go down. And then, yeah, you know the rest. Russell 2000, and what did I say about Russell 2000? We're probably going to get to the near all-time highs before the year ends, right? I've been saying that. And what is going to prop up the market? What's going to be the catalyst for this market to continue propped up? It's the Russell. It's the Bank. Look at Russell 2000. It's 20%. We're not too far from Spider. Right? Remember Banks? When Banks and Russell was lagging? Remember when the Banks were, lagging quite a bit? And we talked about what is going to be the catalyst for this market to be propped up. Right? And if you've been following my videos, I've been talking about it's going to be the banks and it's going to be the small caps. The money is going to rotate to the small caps and the banks, these lagging sectors, and they're going to go up, and that's what's going to keep the broad market propped up. Look at where the banks is. Banks is already, XLF is already outperforming the S&P. It was such a great opportunity here, man, to buy this dip. I was actually accumulating calls pretty heavily actually, on banks. And excuse me. And been doing well with that. One last semiconductor here. All right. Oh yeah, this is a bearish rising wedge. That's a bearish rising wedge. These wedges and all these things that we had an exact same thing here. What the hell is this? Like, what the hell is this? Why does this keep happening? Why? Huh. I don't know. That looks like a breakout to me. What? Well, I don't know. That looks like a breakout to me, right? So let's continue to give benefit of doubt to the buyers. And market is bullish in all terms: minor term, intermediate term, and primary term. And for me, what you see here, that's intermediate. This is minor. And the big trend from 2009, that's primary. So that's how I look at the market. And so I think market is ready to thrive. We're going to have corrections in between, but we're going to have a great year next year as well. So I do have a promo, Thanksgiving special promo that I want to share with you. It's not going to be long, but I remember I did the video last time, so you can watch the more detail about the membership. So I'm going to run the promo so you can go to tradersclub.com, click on the club membership, it's going to get here, and you can click here, which is going to take you here. But so I'm running it for the Thanksgiving whole weekend, so it's going to end Sunday, late evening. So you got 4 days to think about that, and you can feel free to watch this video, which I'm going to explain more about the membership and things. But I just pulled this yesterday. So this is from my brokerage account, E-Trade. And this is the only account I have. I don't have any other account. This is the only account. So it's one thing to call things. People call things, people say things. This is a good level to buy. 2014 or late December, 2018, I called it. I told you we're gonna see a, huge reversal. People call things all the time. Maybe you call things all the time because people always like to, be right, be respected in public places. Look, it's one thing to say certain things and one thing to actually do it, actually buy it. And you can see if you just look at my thing, and I told you that I was buying these dips, and I was buying those dips, and I was not closing out any of my positions. I was holding I'd be closing out some positions, not a lot, but I was holding majority of my position and buying the dip. So this is how I was able to achieve this. I was able to achieve this gain. I'm having the best year this year in my trading career. I had the best year in 2017, but I'm having the best year in 2019 right now, and market hasn't even moved because 2017 I had the best year because I captured this. I captured that. I was long from here buying this dip, and I captured that 2017 move all the way to the top, right? Well, the thing about it is market hasn't even fully broken out yet. We're just breaking out now, and actually my performance 2019 is actually higher than 2017, is because when I saw this pullback, I didn't close out any of my positions, but I accumulated more and I bought these dips. That's why. And this pullback, gave me opportunity to buy those triple shares because I never had triple shares in my portfolio ever. And when I saw this, I knew that I had to buy those. So you can see how it fluctuated, and then as the market goes, my account goes. So we still got another month to go. As of a couple days ago, I'm at 103%. I'm beating the S&P by 5 times. So it's been a phenomenal year for me. I just added this. My win rate is 78% this year. So if I did 100 trades, 78 of them was winning trades. And this only based on trades that were closed. It's not counting the trades that are open. There's a member only report. I've done this for members. The future S&P 500 30,000. And I'm not kidding. I'm talking secular trend of things before next recession hits. So with any membership today, there's gonna be this report will be available in the member area. And there are so many special reports that I only share with my members. Not because I'm cheap, it's because market follows the majority, and I don't want to share these secrets or these analysis that I was able to do well in the market. I want them to be quarantined. You know what I'm talking about? If you have a treasure map, are you gonna go on TV and start talking about it? Because if you tell everybody where the treasure is, nobody's getting the treasure because everybody's gonna go there trying to kill each other to get that treasure. Am I gonna write a book about it? No, I'm busy hunting that treasure. You see what I'm talking about? So I have this treasure map and it's been working well for me. Why am I gonna go? You know what I mean? Especially for the fact that market always tends to follow the majority. Especially when it's been working. I'm busy hunting for that treasure. I don't have time to write a book. I don't have time to go on CNBC to tell these things. I wouldn't trust anybody on that mainstream media. Reversal prediction. You guys seen this here? This is public video. It's January 5th. You can go and they're still there. There's a link right here where I predicted that V-shaped reversal is coming. All right, this is an article that I did. You can see January 8, 2019. S&P. This was when S&P was what? 2,500. We're close to what here? Somewhere here, right? I think we're gonna get to 4,000 late next year, maybe, right? Or early 2021, right? Early 2021. But it's been playing out we're tracking really well. Apple, where's Apple today? Apple's at 267. 267. Oops. Apple's at 267. Right? My target 300. But I also think 320, 370 is possible. But it was at 147 as I was accumulating. I actually didn't buy right at the lows. What I was doing was I was actually buying that, and I was buying more here. That's what I was doing. So I actually didn't get in right at the lows. So I bought it a little early. I bought more when it came down, and then when it came to 147, I bought more. And so I closed out all my calls on Apple. Obviously, after that kind of move, that was some monster move. I closed out all my calls somewhere up here. I closed 1/3 of my shares recently. 1/3. So I was buying here, and adding here. Closed out all of my calls, which I think I bought calls down here, not down here. I bought calls here. I closed it out with a really good gain. And then I closed out 1/3 of my shares here. I had a pretty sizable shares, but it just went straight up, and I had to close out some. And any kind of pullback, I'll buy more, but I feel like maybe 50 MA retest. We'll see, right? So that was a prediction. That article right there, you can click on that. You'll see that article. It's a public article. Market forecast, right? 2000. There, that's the article right here. Right there. I wrote that in early January. 2019 is going to be huge. It has been huge, right? 2019 is going to be huge. It has been huge. So this is based on realized return. So position they were closed. So you can see I'm still holding a lot. And this is a regular price there. But and you might be thinking like, well, you know, how high can the market really go, right? Well, I want to share this chart with you. This is Russell 2000 today. I actually just screened this yesterday. I want you to look at this. That's what you call rising pivot, because prior resistance acting as new support, and that's a rising uptrend support right there. This is Dow Jones Industrial Average, early 2016. You know, and these are kind of the charts that I share with my members. And this is just, I have so many. I just picked one, and I have to share this with you. Look at this setup. And there are many, many reasons why I think market is going to thrive. But this is just one chart that I'm sharing with you. And my members are fully aware of all this because I've been sharing it. We've been tracking it. I've been updating them. And there are many, many other reasons why. But there's one reason that I want to share with you today is this is Dow Jones Industrial Average. Do you know why that I was long in 2016 lows? Do you know why? There are many other reasons, technical, fundamental, and psychological reasons. But technically, 2016 lows, it was because this. When this was trading at 16,000 on the Dow, this was a prior resistance, rising uptrend support, where it broke out and retested. This is the reason why. I was expecting this move. And I went long. And some of you might think that you're very, very skeptical. Yeah, right. You're just saying that now. Right? After the move, you're saying that right. You're saying that now. No. This is April 25th, 2000. This is a public video that I did. 17,900. 17,000. Dow historical breakout. New secular bull market is ahead. New secular bull market is ahead. This, you can go look at this. The video is still up. I'm not. You know what I'm saying? April 25th, 2016. Look at that. Right, I can draw this right here. I was long. And this video I was telling my viewers, my followers, why I'm very, very bullish. Again, 2016 lows. And then what happened? This happened. And you're like, well, it's already gone. Now what are we gonna do now? Right? It's already made a move. Okay. Russell 2000 hasn't made a move. We're just getting started. So there's still a move that is to be made. S&P is going to 4,000. So I'm excited to where the market is going. You've seen my chart here, my brokerage statement. Then I'm beating the S&P by. That's not 5 times, by 4 times, right? And that is phenomenal return. But I guess some of my members also doing better than me. He's my VIP member. This is named Scott. Been a good year. I went bit heavier on December. This is Scott. Been a good year. I went bit heavier on December 24 last year. I think a couple days before you went big. So the account really jumped. And so that's his account, Scott. And so you can see it cuts off in July, but he was already at 118% in July. So, and he says the only issue is I switched to TD Ameritrade this year. So he switched to TD Ameritrade in July. So his account should be up a lot now by now. And I know he's trading, I think, like 7-figure account. So it's not chump change. You know what I mean? And he's been with me for several years. And he says this is the best year it has been. So a couple days before I went big, he actually went a little bit heavier. Because we're already talking about it. We're already talking the market is going to thrive. We're just trying to look for when to go heavy. So he kind of got in earlier than I did. And that sometimes, market when dips like that, just going like 2-3 days earlier can sometimes give you that much advantage. You know what I'm saying? So that's Scott. And that's just until July. Excuse me, my voice is now starting to crack a little bit. Apologize. This is Badar. He's also a VIP member. He's been with me since last Thanksgiving. I joined exactly at the same time with your Thanksgiving promo last year. So I'm so happy that I recovered all my 60 to 70K loss from 2015 and 2016 market drop and making money on top of it in just 1 year after joining the club. Feeling so proud when I hear friends and colleagues say their returns 4 to 5%. I think, and a lot of people are negative. Like a lot of people blew up. Like they blew their account with the late December correction and trying to short this year, thinking there's going to crash. A lot of people are not participating because they're scared that crash was going to come. So you can see his account as of November 25th is up 53%, doubling the S&P. And that's a phenomenal return. And also, I'm pretty sure he got a pretty large account as well. Excuse me. This last one, his name is Robert. He's also been a VIP member with me for a couple years. He actually came to see me several weeks ago. So we had a nice dinner together. So that's his account. But that's what he's saying is, I switched brokers mid-year. So this is a year to date on the inception of the account. So this is only counting from you can see from May or so, just here, the summer. So it's not counting the December, January, February, March, April. So I think he's close. I know Robert. He follows my trades. He mirrors my trades. So he should be up. His account is probably very, very similar to mine because he switched the broker mid-year, but 64.48%. It's because, when I do for my members, it's not just like, okay, I'm just buying it heavy here. There's these videos, very long, like our video explaining, analyzing the market. Again, technical, fundamental, and psychological. I put most in a psychological and technical the most, and then fundamental. So I look at all those three. Why I believe that this is going to be a huge buying opportunity. Again, there's always a risk. I could be wrong, of course. When Michael Jordan hits that shot in a buzzer beater, he could miss it, But you got to risk it to go for it, And that's life. That's the market. Nothing's guaranteed in the market. And we went for it. And it really paid out well for us. But I think the market is not done yet. There's a big money to be made because the market is just getting ready. Look at the Russell 2000. Just breaking out now. And the S&P and the Dow Qs, I think we're going to see some big move. Look at that. Did you think that maybe market, the move was done here? No, look at this move. And this was just 2016 to 17 move. We're probably going to see something similar next year. But market always, market is very, very savvy. It's going to give you turns and twists and things like that. And there's going to be a volatility days, of course. You're going to wake up one day, market's down 2-3%, everybody's going to be panicking, right? And then what I do is, okay, am I going to buy this dip or am I going to wait for a little bit? That's what I do for my members. There will be updates, there will be special reports, there will be, follow-ups and certain setups, certain positions, certain, you know what I mean? And when their volatility hits, there's constant update every day almost. When the market is doing well, you're not going to see much of updates because market is in a good environment. Because I always tell my members, you know what, it's time to hang out with your family. Because I'm a position trader and active investor. I don't do day trading. I don't do swing trading. And everything I do is long term. So can you imagine? I was able to achieve this kind of return with long term position trading and active investing. Every call options that I buy, it is leaps. It's 1 to 2 years out. And with that, I was able to achieve this kind of and then obviously I own triple shares. That really jumped in my account. Triple shares on all the indices since the December low. So you don't need to go for these risky, like out of the money options that expires, weekly options and monthlies where expire worthless all the time. You don't need to do that. And again, everybody got their own way of looking at the market. This is how I see it. It's been working well for me. So if you click here, you come here, make sure you fill that out, sign your I gotta because I'm I don't know why it's not working. I gotta check that later. Hold on a second. The signature, I will fix that. The signature is not working. I'll fix that anyway. So you can come here and we got the investor, premier, VIP, monthly or yearly. And so that's the special promo there, right? So here's regular price. And excuse me, here's Thanksgiving special promo there. So feel free to let me know if you have any questions. You can contact me through here and think about it. You don't have to make hasty decision. And I believe that market is going to do really well. Market closed now, but there will be market is always going to give us the next opportunity to buy. And when that opportunity comes, I'll be ready. So that's kind of how I'm going to go from here. So I think my voice is breaking down now. So, well, you guys have a wonderful Thanksgiving weekend. I'm thankful that I can able to come to you. It is privilege for me that, I have a good members. I have a good friends on Twitter and YouTube and that I interact with. I'm thankful for that. I have a good family. They're all healthy. I had a good year this year. I'm thankful for that. So I'm thankful for you guys and hope that you will have a good time on Thanksgiving with your friends and family. And let me know if you have any questions, but talk to you next time.